Hey, hello everyone. This is Trader Shiva. So in the last two videos, we have covered the order flow basics and we have also covered the bar statistics features. Okay. So in this video, we are going to cover advanced order flow concepts. So let's go to our topics. So these are the topics we are going to cover, like what is delta and delta divergence. Then we also should know about the cumulative delta and its divergence. Then we will learn about absorption, exhaustion, and aggression. Okay. And then what are the trap traders? Imbalance we have already covered, but we will take some example on it and we will see. Then we will also see how the point of control works. Finished versus unfinished auction. How do we interpret max and min delta? We have already covered caught high and caught low, but we will see few examples on it. And then delta by volume. Again, we have covered it, but we'll see some examples over it. Okay. Now, friends, see, all these things are interrelated. Of course, there is some term for trap traders and absorption, exhaustion, all these terms are there. But when you're looking at the trade, you will find that these are interrelated. Okay, these are not in separation. So please understand that these are only the terms to understand the phenomena, but they are interrelated. Okay. So now let's start with the delta and delta divergence. So what is delta? Guys, what is the delta? You guys know that delta is the difference between the market buyers and market sellers. Okay. So this is a nifty chart where you can see the order flow charts. Now, if you want to add delta, you can go to FX study, go to order flow, click on delta bars. Okay. Now, if you go to delta bars, you need to go to settings. If you go to settings, here we have multiple settings. So first setting is cumulative. So if I switch off the cumulative and if I switch on the divergence, then I am seeing the divergence. Okay, so these are the divergence about which we will talk in a little bit. And if you want to see the cumulative delta, you have to just switch it on. And now your cumulative delta bars will be acting like candles. Okay, so you can see that you have price candle over here and the delta candle below here. Okay. Now, if you switch off the cumulative delta, and here you also have the buy volume and sell volume. So if you can switch on, you will see the buy and sell volume along with the delta bars. Then you can also add some other things like moving averages. Okay. You can also add Bollinger Band with the delta bars. So basically what is delta, guys? So delta is actually the difference between the market buy orders and market sell orders. So if you add all these orders and subtract all these orders from these orders, you will get this particular delta bar. Okay. So in this candle, there are more number of buyers and in this candle, there are more number of sellers. That is why the delta for this candle is negative and delta for this candle is positive. Okay. So I have already told you about the divergence setting. Now let's get back to our slides. So the general understanding is that if we get a green delta, means there are more market buyers that I have just explained. So if there are more buyers, the price should go definitely up, right? Similarly, if we get a red delta, it means the sellers are more, means market sellers are more, and the price should go down. Okay, so this is the general understanding and this is the normal scenario which should happen. However, divergence occurs when this pattern is not followed. Okay, now here if you see a positive delta divergence occurs when the delta underneath the candle is positive but the candle formed is red. Okay, now you see here, can you see this one? Here the delta form is green but the candle formed is red. Okay, so what is happening here? See, there are more number of buyers. So if the buyers are more, why is candle going to red side? Okay. Then similarly, a negative delta divergence is formed when the delta candle is red, but the candle formed is green. Okay. So you can see here, the delta candle is red, but the candle formed is green. Okay. So let me tell you guys, if you remember in the first video, we have talked about the limit buyers, limit sellers, and market sellers. So there are four kind of players. Okay. Now, if you see here, all those sellers are coming. Okay. All those sellers are coming and selling. But you see, so sellers means market sellers are coming, but there is some limit buyer sitting over here. So that limit buyer is actually absorbing all these sell orders In a similar way, if you see over here, market buyers are coming, they are buying, but there is some limit sellers sitting over here. And because of that, the price is not going up. Okay. Even though the buyers are coming, but they are getting absorbed by these limit sellers and the price is going down. Okay. So this is delta divergence. Now, are you going to take trades just because of delta divergence? No, friends, this is not the right way. Okay. Delta divergence is just an extra information. The trade should be taken by taking a holistic approach that we will discuss in the video. Now let's talk about cumulative delta. So what is cumulative delta? Okay, so if we keep on adding the delta bar by bar, starting from the time market opens, we get the chart of cumulative delta. So if the delta is positive, we are going to add that delta to the previous sum. And if the delta is negative, we are going to subtract that delta from the previous sum. Okay. So it means for each day, the cumulative delta calculation will start from 0 and it will keep on adding through the entire day. All right. So this is how cumulative delta works. We can see a picture over here. So this is the example of delta. It's just delta. Now, if you see on the top, this is cumulative delta. These are the same delta candles. If we subtract this delta candle from this, then we add this, then we add this, then we subtract this, add, then subtract. So can you see? You are adding, then subtracting, then again this is adding. Now you are subtracting these red candles. So this is how you are getting cumulative delta. Now, if the cumulative delta value is above 0, it means that there are more number of buyers on that particular day and the buyers are in control. In a similar way, if the cumulative delta is below 0, that means the sellers are in control on that particular trade. Now, what is cumulative delta divergence? Okay, so you guys have seen like RSI divergence, MACD divergence, right? So this is a similar divergence. However, cumulative delta divergence is not lagging indicator like others. You guys know that delta is the most leading indicator in market. Okay, so its divergence is not lagging. Okay, now here what we are trying to do is we are trying to look for condition where price and cumulative delta both are synchronized or both are in disagreement with each other. The condition of disagreement provide us with opportunity to trade. So let us see how it looks like. So in a bullish market, there could be two possibilities. So first possibility is that the delta is rising, but the price is not rising. So the delta is making higher high, price is not making higher high, or it is just stable. On the other hand, you see here the cumulative delta is not rising, but the price is rising. Okay, so this is the scenario in case of a bullish market. You can see it here. You see there's a lot of delta coming over here, right? But the price is not moving like that. On the other hand, in this particular example, you see there's not a lot of delta, but the price is moving speedily to the top side. These are the examples in the bearish market. So here the delta is making lower low, but the price is actually not making lower low. It is making a double bottom. Okay. And here the cumulative delta is making a double bottom, but the price is making lower low, right? So these are the cases of cumulative delta divergence. The same example can be seen here where the delta is going down, but the price is not going down. And here you can see the delta is stable, but the price is coming down. Okay. On the other hand, here also you can see the delta is not coming down, but the price has come significantly down. So how does this cumulative delta divergence gives us opportunity to trade? To understand that, we need to understand three more concepts, which are called absorption, exhaustion, and aggression in the opposite side. Okay. So what is absorption? So absorption happens when large cell delta is consumed by limit buyers or large buy delta is consumed by limit sellers above. Now, where do we look for absorption? We look for absorption at key levels. What are those key levels like value area high, value area low, previous day high, previous day low, and VWAP levels? Okay. For both continuation and reversal trades, I will talk about this continuation and reversal trade. Now, absorption may result in breakdown trade if the market orders have eaten all the limit orders. However, absorption may provide some good reversal trade opportunity if the market players are not able to move the price in desired direction and they show signs of exhaustion. Okay, so let's get back to the slide again. So if you see this particular example, so friends, first of all, let's understand what is absorption. Okay, so I have just told, see here you can see there's a lot of green delta coming. Okay, lot of green delta coming, but what is happening? The price is not moving upward. That means there is some limit seller, okay, which is actually absorbing all these market buyers. Okay, so this is point number one. Now, is it necessary that the market is going to reverse? No, the market may reverse or the market may not reverse. Okay, now suppose these are the limit seller over here. If more number of market buyers keep on coming, so what will happen? These limit sell orders will get consumed and the market will go upside. It will give a breakout. But if the limit orders are not consumed, so what is going to happen? The market will reverse. So how you are going to know whether the limit orders are consumed or not? Okay, so for that, let's understand the concept of exhaustion and aggression on opposite side. So what is exhaustion? So it is the market buyers who drive the market up and market sellers who move the market down. But if we see the participation of buyer has reduced in long side, we say the market buyers have exhausted. And if we see that the participation of market sellers has been reduced in the short side, we say the market sellers have exhausted. Okay, so if the absorption of the market buyers is followed by the exhaustion of the market buyers, it provides a very good short trade opportunity. Similarly, if the absorption of the market seller is followed by the exhaustion of market seller, it provides a very good opportunity for long trade. Okay, so this was about absorption, exhaustion. Now you should also understand that there should come aggression in the opposite side. Okay, so now let us completely understand this concept. Okay, so now if you see this concept, what is happening? You can see these big green delta. These big green delta are getting absorbed. Why? Because the price is not moving upside. Okay, now you have seen that there is some absorption and that can also be verified in form of delta divergence. That is cumulative delta divergence. Okay. Now, after that, what do you see? There are no buyers. Can you see the delta candles? The delta candles are very, very small. If you see these delta candles and these delta candles, there is a lot of difference. So these are big delta candles. They are absorbed. Now you see the signs of exhaustion. Okay. So are you going to take trade? Now, if you see that the buyers have exhausted, now you will think that the market will reverse. Guys, don't make this mistake. The market may not reverse. The market, the next delta may again form, with big quantity and the market may again go upside. Okay. So you should not take trade like this. Now you should see the sign of aggression in the opposite side. Now you see this aggression in the opposite side. Can you see that big red delta coming? Now the red delta have started coming. Now you can go and enter into short trade. Okay, so this is how you should take the trade. Like, okay, you see the delta divergences, that is cumulative delta divergence. You see signs of absorptions. Then you try to find whether the buyers or sellers which have been absorbed, now are they getting exhausted? And once they are exhausted, you just don't jump into trade. Wait for the aggression in the opposite side. Once the aggression in the opposite side has started, you can safely enter into trade. And you definitely have to put the stop loss over here because there is nothing 100% in the market. Okay, so this was about absorption, exhaustion, and aggression. Okay, now what is trap traders? So friends, this is a related concept. There's nothing new over it. This is just a phenomena. Okay, so most of us would have experienced this. The price reaches at a reference point and you were waiting for a breakout trade. You enter the trade. Price seems moving in your direction. However, after some time, the price reverses and gives a big move in the other direction. Your stop loss is hit and you are into a liquidation trade. So these are the trap traders. So now how do we see that? This is the previous swing high. Okay. Now you see the price has just moved above this previous swing high level. Now many breakout traders are going to enter this trade, anticipating that this is a breakout. And what is going to happen? Now the price has started coming down. Now suppose a person who has bought at this level and the price is coming down, what will happen to him? His stop loss will be getting hit. So now he is turning into a seller. So now the sellers are coming and the market has come downside. Okay. So these are the trap traders present over there. That is trapped buyers. Now you see here, this was a big green delta. You see the number of orders over here. These are big buy orders over here. Now, what is happening? The price is coming downside. So what will happen to these traders? These traders have to liquidate in the down move. Okay. So these traders are going to convert into sellers. So this is about the trap traders. Now we have already understood about the imbalance in the first video. Now let's talk a little more about it. So most of the time price remains in balance or in consolidation phase. However, when price leaves the consolidation phase, it is said to be trending or imbalance. Okay. Now the price moves faster when it is in imbalance, and when there is a pullback to imbalance level, it gives us a very nice trading opportunity. So let us see the example over here. So what has happened? You see, this is the level for value area high for this market profile. The price has given a small pullback to value area high, and now it has again moved to balance. Okay. Now you have a context with you that if the price is moving above value area high, what will happen? The price will be in imbalance. Okay, now you will ask that we have not learned about these concepts. So friends, don't worry. In the next few videos, we'll be talking about the concepts of value area high, value area low. We will understand about the auction market theory and what will be our larger context when the price is, moving outside the value area, or when the market is inside value area, how we are going to tackle the trades. Okay, so here the context, the larger context is saying that the price has moved above the value area, so the price is in imbalance, and that has also been confirmed by the order flow chart by showing us a large imbalance. So now what is our job? Once the price moves to this pull back this area, we are going to take a long trade. Okay, so here again, this was the imbalance candle. The value area was below. Three stacked imbalances, the very small quick retest of this area, and then the prices move upside. Okay, so this is how imbalances are working. So try to see the point is here, there are many traders who try to take imbalance like a magic. They say that there's a buy imbalance, let's go and take a long trade. No, this is not the way. You should see the entire context. So first of all, you should see whether it's inside value area or outside value area. Then what are the other concepts like absorption, exhaustion, aggression in the opposite side? Is it happening? And if the imbalance is actually supporting those concepts, okay, so you have to take the trade in a holistic way. Now let's talk about point of control. Okay, so point of control shows where the price level, where the maximum trading activity has happened. So normally it should be in the middle of bar. In sideways market, we get overlapping POCs for recent candles, but in the trending market, we keep on getting POC, and the previous candle POC tends to act like a support and resistance. Okay. So how to get the point of control in Go charting, I have already explained in the first video, that is the basic video. Guys, please look at that. Now let's see how the point of control looks in a sideways market. Can you see these are the overlapping POCs to each other? Okay, so this indicates the sideways market. And now this is the trending market. Now can you see this point of control is acting like a resistance? You see, right? So this is how you can interpret point of control. So we have talked about the absorption, exhaustion, and aggression in the opposite side. So suppose you see aggression on the opposite side, with a big delta and a big candle, you should also try to see whether the POC has actually jumped those level or not. So if you see a lot of jump in POC, with respect to previous candle POC, then you can also take it as an evidence that the aggression in the opposite side has come. Now, talking about finished auction, friends, finished auction is a quite old concept, and personally, I'm not using it because I don't see it working most of the time. Okay, so what is the finished auction? So if zero is appearing on the top left of the candle, it is representing finished auction for the up move. The reason for that is, for sellers, the current price is so attractive to sell that there's a lot of competition to sell from that level, and price is not able to move up further. Okay, so what is happening? See, on the left side of the candle, there are market sellers that you know. Okay, now everybody would like to sell, at a higher price, right? But here, the selling is so vigorous. The selling is so vigorous that everybody is trying to sell at whatever price he is getting. Okay. So if everybody is selling at current prices, there is no selling left at the higher prices. Okay. So because of that, we understand that there is so much of selling activity so that the market should go down and the auction on the top side has ended. Okay. So that is why we say that this is a finished auction for the up move. Okay. In the similar way, if the zero is appearing on the bottom right of candle, then it is representing the finished auction on the down move. Okay. So now let's look at the example. So if you see here, we have a zero on the bottom right of this candle. Now, what does this mean? That the price is so attractive even at this level that there are 217 people ready to buy at this level. Okay, and the price is not coming down. So that is why we are getting zero, and there are so many buyers coming at higher levels. So the price is so attractive even at higher levels that there is no one is going to wait price to come to lower level. Okay. So then we say that, okay, the auction has finished to the downside and now the market should go up. Okay. So this is how we understand finished and unfinished auction. So guys, you can do back test on it. I have not seen it working very efficiently, but yes, if you combine it with other concepts like absorption, exhaustion, aggression, delta divergence, then you will get some good results. If you're trying to use it in isolation, I don't see good results with these concepts. Now let's talk about the maximum and minimum delta. Okay, so just like price candle, we do have delta candles, and delta candles do have open, close, low, high values as same to price candle. Okay. Now, open of a delta candle is always zero. Why? Because it is the difference of the buyers and sellers, and just start of the candle, they both are same. Okay. Now, high of the delta candle is the maximum delta. On the other hand, low of the delta candle is the minimum delta. And close of the delta candle is actual delta value of that particular candle. Okay, now understand. See, what happens during bar formation, maximum delta indicates the maximum difference between the market buyers and market sellers, indicating the maximum domination of buyers over the sellers. So for example, if a green candle is forming and green delta is also forming, so the maximum delta will be showing the maximum advantage of market buyer over market sellers. Okay, now position of closing delta with respect to maximum or minimum delta tells us about the relative domination. So suppose the buyers have come to this level in the delta candle, but what happened during the close of the candle, the delta candle has come down and there is a wick on the top side. So it means that the domination of buyers has decreased. Okay. So buyers dominate the market if the maximum delta is almost equal to closing delta. Okay. So if the closing delta is equal to maximum delta, it means the domination is continuing. But if the maximum delta is a lot more and the closing delta is lesser, it means the domination is reducing. We have seen in the bar statistics, we do have a filter, in the bar statistics where we can find out whether what is the value of closing delta with respect to maximum delta. Okay. So you see here what was happening. You see these delta candles and the price candles. Now you see this particular delta candles. What has happened? The delta would have gone to here, this level, but during the close of this candle, what has happened? The delta has come down to this level. So there is a wick on the top side, and then you can see there's a, downside move. So this is how you interpret maximum and minimum delta. Now let's talk about a little bit caught high and caught low and delta percentage. We have already talked about these concepts in the first video, but let's see it on the chart. So let's try to observe caught values on the chart. So we have already discussed in the first video that caught low is generally positive and caught high is generally negative. Now, on the bottom side, if you see the caught low negative, that means possibility of trapped seller. So you see here we have caught low. Generally, the caught low is positive. Okay. Now you see here it is a negative value. And what about this? You see it's a big, big negative value. And what has happened? You see after that, the market has moved upward. Okay. And then throughout the range, caught low is generally positive or a negative with very small value. But if you compare this, okay, so this was 51,000. Okay. Nowhere you are going to see this big value of caught low. Okay. Similarly, on the reversal from the top, you will see caught high with a big positive value. Generally, caught high is negative. So if you see here, you can see we have started getting high caught high values. Okay, this is 21.7K. So this has started giving signs of reversal from this level as well. Now the point is you're not going to use caught high and caught low in isolation. Okay, always try to use, as I have explained, always try to use with the holistic concept of absorption, exhaustion, and aggression in the opposite side. If these things are supporting you with the main concept, you should definitely take the trade with the proper stop loss. Otherwise, don't take trade in isolation. You just simply see caught high negative value or positive value and you take the trade. No, that is not going to work. Okay. So that's why the context and the validation of context is very important. Okay. And about the delta percent, we have already talked in the first video. Okay. So guys, with this, I'm ending this video. If you have any more doubts, you can definitely ask in the comment section. Thank you guys.